Good morning. Here is today's Korean economic news briefing. South Korea's economy is currently navigating a complex landscape, grappling with immediate geopolitical challenges while simultaneously laying the groundwork for future growth. A major focus this week has been the government's swift and comprehensive response to escalating Middle East tensions, which are significantly impacting global energy markets and supply chains. The government has declared the current Middle East situation an economic state of emergency, signaling its resolve to mitigate potential repercussions. In response to prolonged high oil prices and supply chain instability, the administration is pushing for an additional reduction in fuel taxes. Furthermore, a substantial supplementary budget of 25 trillion Korean won is being advanced to address these economic pressures. A key detail emerging from the ruling party and government discussions today is the intention to include compensation for refiners' losses, should the government implement an oil price cap to stabilize consumer fuel costs. This supplementary budget will also allocate funds for expanding discounts on agricultural and fishery products, along with increasing energy vouchers for vulnerable households, aiming to alleviate the burden of rising living costs. Complementing these emergency measures, the government is also focused on strengthening fiscal soundness. Taking advantage of a projected surplus in tax revenue this year, the administration plans to pursue a net redemption of national debt. This marks the first time in 5 years that the government will actively reduce its outstanding debt using excess revenue. Additionally, a significant 5 trillion won emergency buyback of national bonds is planned to stabilize the bond market. These steps demonstrate a dual approach, addressing immediate economic headwinds while maintaining fiscal discipline and reinforcing the stability of the financial system. Looking beyond the immediate crisis, the government is simultaneously investing in the nation's long-term economic engines. The National Growth Fund, designed to unearth Korea's growth drivers for the next 2 decades, has officially begun accepting applications from fund managers. This initiative aims to attract 5.5 trillion won in private capital, leveraging government and advanced technology funds as a catalyst. The fund will strategically invest in ultra-long-term technology development, scale-up ventures, and regional industries. For the general public, there's good news. A public participation fund is slated for launch around June or July, opening avenues for individual investors to partake in and benefit from the nation's future growth. However, the current geopolitical climate is casting a shadow over financial markets. The prolonged Middle East conflict, specifically the ongoing US-Iran negotiations which are reportedly facing difficulties, has led to significant volatility. Today, the Kospi index experienced a sharp decline, falling 3.22% to close at 5,460.46. with foreign and institutional investors net selling a combined 4.06 trillion won. Meanwhile, the Kosdaq index also saw a drop of 1.98%. A noticeable trend has been the war-driven money movement, where foreign investors are reportedly selling Kospi stocks while accumulating Kosdaq holdings, particularly in growth-oriented and small to mid-cap companies, indicating a shift towards risk aversion and a search for alternative growth opportunities. This market instability is further reflected in the bond and currency markets. Korean government bond yields have risen to their highest point in nearly 2 years, driven by the escalating $1 exchange rate and persistent inflation concerns linked to high oil prices. The $1 exchange rate surged for the second consecutive day, closing at 1,507 won against the dollar, primarily due to the faltering Middle East peace talks and foreign sell-offs in the domestic stock market. In the semiconductor sector, a key pillar of the Korean economy, investors are closely watching the dynamics between memory and CPU stocks, especially after reports of Micron's factory expansion plans. Against this backdrop, Korea's economic vulnerabilities are stark. Data from the Bank of Korea highlights that Korea's net crude oil import ratio to GDP stood at 4.6% in 2024, significantly higher than other major economies like India, 3.6%, Japan, 1.8%, and China, 1.7%. This makes Korea particularly susceptible to global oil price fluctuations. On a more positive note, while a specific Samsung tax void and a real estate downturn posed challenges, Suwon City demonstrated robust fiscal management, successfully maintaining its financial soundness. Internationally, there are mixed signals. Japan appears to be emerging from its deflationary era, with rising prices, wages, and real estate, alongside near full employment. In the United States, employment and economic growth remain stable, though the February unemployment rate of 4.4% is very low in the long run but shows an upward trend, raising concerns about historical patterns where unemployment, once rising, tends to climb to at least 6%. Domestically, Financial authorities are tightening the reins on household debt, with the Financial Supervisory Service Chief indicating that household loan growth this year will be managed at a level significantly lower than half of the nominal GDP growth rate to ensure financial stability. Amidst these challenges, certain sectors are showcasing resilience and growth. The biotech and pharmaceutical sector, for instance, is a major driver of the KOSDAQ market, with 6 out of the top 10 market capitalization companies now being biopharmaceutical firms. Alteogen, a prominent biotech company, has notably reclaimed its position as the second largest company by market cap on KOSDAQ following an exclusive licensing deal with global pharmaceutical giant Biogen, with some analysts even forecasting it to reach the top spot. The second battery special zone in the Gwangyang Bay area is also pushing to attract an electric vehicle factory to establish a complete value chain from raw materials to finished vehicles. The rise of artificial intelligence is another transformative force. Microsoft Korea projects the domestic AI market to grow at an annual average of 30%, reaching approximately 75 trillion won by 2032. This growth is driven by the expansion of frontier companies, collaborating with AI agents to create business value. Industries are rapidly integrating AI. Hyundai E&C, for example, is strengthening its entire energy value chain, from production to consumption, by leveraging AI, nuclear, and renewable energy to meet the structurally increasing power demand from the AI industry. Nexon Tire is also adopting AI for innovation in R&D, aiming for flexible adaptation to market changes amid global protectionism and geopolitical uncertainties. Even in public services, AI is making a difference, with the Korea Land and Housing Corporation expanding its AI-powered welfare call service for elderly residents in public housing. Furthermore, the AI company Intellivix, a leader in AI-based video surveillance, has initiated its IPO process, highlighting the burgeoning interest in the AI sector. In the real estate market, Seoul is seeing a complex dynamic. While apartment prices across the capital continue to rise, there's a divergent trend. Prices in the affluent Gangnam 3 districts and the Han River Belt are softening, while outer Seoul areas are experiencing an uptick. Meanwhile, the Jaeons, or lump sum deposit rental market, is facing a shortage, leading to accelerated price increases despite the broader softening of sales prices in some high-demand areas. Looking ahead, April is poised to be a robust month for new apartment supplies, with over 47,000 units in 50 complexes scheduled for release nationwide. This significant increase from previous months is attributed to April being a traditional peak season for new developments, along with some delayed projects from March and a push to finalize schedules before local elections in June. Addressing the youth housing crisis, Jeonju City is offering public rental housing at just 10,000 won per month, though concerns remain about whether the limited supply can meet the exploding demand. On the international trade front, protectionist sentiments persist. Peter Navarro, a key trade advisor to former U.S. President Donald Trump, recently stated that plans to impose a global tariff hike of 15% are in process. This signals potential future trade friction. Meanwhile, Korea's Trade Commission has recognized dumping practices by Japanese and Chinese industrial robot manufacturers, recommending anti-dumping duties of up to 18.64%, reflecting efforts to protect domestic industries. In the context of the Middle East, while Iran has rejected the U.S. peace proposal, deeming it unrealistic and excessive, it has also stated its intention to allow passage for non-hostile vessels through the critical Strait of Hormuz, a potential partial de-escalation for global shipping. For investors, the immediate outlook points to continued market volatility driven by geopolitical uncertainties and inflation concerns. While traditional manufacturing and large-cap stocks on Kospi may face headwinds, the shift of foreign capital into KOSDAQ suggests potential opportunities in growth sectors like biotech and AI. Vigilance regarding the $1 exchange rate and bond yields is also crucial. For general viewers, the government's comprehensive support measures, including fuel tax cuts and a supplementary budget, aim to alleviate the burden of rising living costs. However, continued inflation, coupled with the complex dynamics of the real estate market, will require careful household financial planning. The long-term outlook remains positive, driven by strategic investments in future growth engines and the transformative power of AI across various industries. That concludes our economic news briefing for today. Thank you for joining us.